Hi, I'm Justin, and welcome to the Landis Look, where we take an inside look at the world of real estate. Today, we're going to take a look at what it would take to buy your first investment property. We'll look at how much you have to put down, where that down payment could potentially come from, what do you have to do to be able to qualify for an investment property, and then maybe some basic steps on how to get started with it. So, first of all, how much do you have to put down? Do you have to have enough cash to pay for the entire investment property? Can you put just 3 or 5% down like a personal home? The answer is in the middle. So for a true investment property, one that you're not occupying, 15% is the starting point. So on a $100,000 house, if you were going to buy that as an investment property, that's $15,000. I will say that very few people use the 15% because it's just more expensive. I mean, when you put that much down on an investment property, your cost of the financing go up quite a bit. So 20% is a starting point for most folks. And if possible, most of our investors will try to do 25% down. So that'd be $25,000 on an $100,000 house. And the reason for that is you look at those earlier options of putting less down, you may be looking at half a point, or maybe even on a condo, 3/4 of a point in rate. And that's a lot over 30 years of a house. And so 25% is a great place to be for an investment property. Now, that can be a good amount of money, right? You're buying a $200,000 house, that's $50,000. Do you have to have that in liquid cash, or could you get it from other sources? The answer is you can get it from other sources. And to get through the details of this, would need to talk in more specifics about your situation, but you could get it from an IRA, could get it from a 401k, you could take out a home equity loan on your primary residence if it has lots of equity. So you have some options potentially to use the money that you already have or the equity that you already have, as opposed to I just have to have this liquid cash. Secondly, what does it take to qualify? So you're like, man, I don't know if I could qualify. My debt to, when I say qualify, I mean debt to income ratio. So how much debt you have relative to how much income you have. This is one of the most amazing things about buying investment properties, is that you can actually use the future rental income to qualify for the investment property. So that means even if it is not rented, but you're going to rent it, you can use that income to qualify for the purchase of that property. You get a credit of 75%. So if it's actually leased, we know what the rental is, but otherwise there'll be an appraisal done to say what's the rent expected to be. You can use 75% of that income to qualify, which is super helpful because, if you're putting 25% down and we're buying something that's going to have cash flow, a lot of times that can cover the entire qualification. And so you may think, hey, I don't make bukus of money, but I do have enough for a down payment, or I have a source for a down payment from somewhere. Could I qualify? The answer is yeah, a lot of times you can. And I will say on all this financing stuff, it all depends on your personal situation. And so we need to dig into that to get into the specific details. One little hack I'll give you, if you're like, man, that type of down payment, it is just too much. Here's something that I've seen a lot of people do to get their first property. If you are willing to occupy a unit in a 2 to 4 unit, you can use traditional financing on that. So maybe you buy a duplex and you live in half of it and you rent out the other half. Well, if you could qualify for 3% down or 5% down like a single family house, you can do that. And then you have a rental property that you put a lot less down and that somebody else is paying your mortgage. So that's just a little house hunting hack. If you're then asking, well, hey, Justin, use the example of $100,000. Is that possible in Atlanta? Can I buy a house for $100,000? The answer is yes. There is kind of a sweet spot in the city, probably in the 150 to 250 range, where you are getting a good property in town. The rents line up pretty nicely with the purchase price. But yes, you can do it in the $100,000 range. You can also in Atlanta do it all the way up. And all of this depends on your situation, what your investment goals are. And that's really where we want to start. So I've got 3 things for you today. So 3 things for next steps. First, if you want to explore this, both what does the financing look like? What are my investment goals? What options would I have? Drop us a message. You can always put a message in the comments here, send us a direct message or email me. Secondly, I've got a couple things free for you today. We're gonna have a link to download a rental cost analysis spreadsheet. This is just a basic sheet. This is used as an estimate, but it's a nice tool to start with where you can plug in, this would be your purchase price, this is the taxes, This is if I'm going to manage it myself, I'm going to have someone else manage it. And it'll put a nice little analysis for you where you can get a high level look at what sort of cash flow you would have, what sort of equity you would be paying down. And third thing, if you're curious about properties, and I know a lot of you are because I talk to people all the time, you're searching for houses even though you're not actually in the market, you're always looking at what's online. We're going to try to weed through the noise for you. And each week, we're going to send out 3 to 5 properties that have caught our team's eye over the week that could be potential investments. This could be potential rentals. This could be fix and flip. This could be a lot to build new construction. So if you're curious to see some of the deals that we come across, and these are both things that could be on the market and stuff that is not on the market, you can sign up on the link below. Just fill in your email and we'll start to send those out weekly. And check it out. If there's stuff that's interesting, you can send us a message and we'll help you evaluate and investigate the property. So 3 things for a takeaway today. Sign up to get those emails. Reach out to us if you're interested in having a deeper conversation about your personal situation. And 3, go ahead and download that spreadsheet. And that way you can start to evaluate some potential deals when they come your way. Thanks for listening today, guys. We'll see you next week.